Happy Thursday out there, folks. This is Darius Dale here to present our macro minute for Thursday, July 28th, 2022. Starting with markets, we have stocks up this morning, commodities up, crypto up, dollar down, global bond yields down, market moving headlines. So we got a technical recession, but that is not a hashtag actual recession. So the U.S. economy contracted at an annualized 0.9% pace in the second quarter as inflation undercut consumer spending and Fed hikes stymied business investment and housing demand. Consensus for growth was calling for positive growth of 0.4%, so 150 basis point miss, following a decline of minus 1.6% in the prior period. Personal consumption, obviously the biggest part of the U.S. economy, rose at a positive 1% annualized pace, but it decelerated from the first quarter. So we're continuing to see some of the more technical aspects of growth really weighing on things like inventories, net exports, et cetera. But we're also seeing a deceleration in consumer spending, which is something we've been calling out our research for a while now. Shifting gears here, the breadth of quote unquote hashtag solid earnings, or not hashtag, sorry, quote unquote solid earnings is deteriorating. So Meta, which literally makes me chuckle every time I read it, was lower pre-market after delivering its first ever sales decline and a downbeat forecast. Samsung fell victim to recession angst as chip revenue missed. Qualcomm slid after lowering guidance for smartphone sales. So you got Meta lower because customer engagement's declining. Samsung's down because chip revenue is missing, and Qualcomm's down because of lowering guidance for smartphone sales. Qualcomm makes chips for smartphones. So those three things together don't necessarily tell you that Apple's about to blow it out of the quarter after they report after the bell. But one thing, even if they do, we talked about this in our leadoff morning note, but there's a real decline in implied volatility risk premia coming on the other side of the FOMC. That event vol got priced out of the market very aggressively yesterday, I might add. So you don't have the kind of squeeze risk you would normally have heading into Apple earnings report. You got Amazon after the bell, Intel's due out as well. And then shifting gears, Biden kowtowing to President Xi over in China might be the final bullish policy catalyst amid this bear market rally. So Biden and Xi Jinping just began their phone call. The South China Sea will likely be a topic, especially as U.S. aircraft carriers and strike groups just entered the region. Biden will affirm U.S. policy on Taiwan, per a White House official. So I got to believe that this sort of show of force in the South China Sea with U.S. aircraft carrier, et cetera, is really just sort of a negotiating tactic by President Biden to just sort of to get some appeasement from the Chinese on their strategic objectives. So, but just what I mean by kowtowing is that if this call goes well, we might start to see a rollback of some of the Trump era tariffs on the imported Chinese goods. That would be a positive signal for the market because it would accelerate the process of decelerating inflation. So it's obviously a one-off thing, but it is one-off. In this particular state of the market is something that, in my opinion, would be interpreted bullishly. But again, we're still heading into a deepening growth cycle downturn. We're still heading into a profit cycle recession, most likely. That is very likely to culminate in an actual recession. And it's our opinion, based on our analysis, that an actual recession has not been priced in. So we are very much faders of the bear market rally until further notice. But certainly we got a lot of notice on the FOMC and the Fed's likely trajectory for policy. Yesterday, we wrote about that in great detail in our leadoff morning note, specifically that, so I'll let you go check that out on yourself. We don't need to waste time on the macro minute with that. Anyway, big movers. 10-year or 2-year U.S. Treasury yield down 15 basis points on this GDP miss to 2.85%. It's actually down 27 basis points month over month. So the market's really pricing out kind of the hawkish right tail of policy rate tightening. And we're seeing this in OIS forwards. If you look at it on a 1 year, 1 month forward contract, the OIS forwards are down 19 basis points day over day to 2.76%. Down 58 basis points month over month. But guess what's on the other side of the markets are aggressively pricing in a sooner dovish pivot than otherwise is a reflation of commodity prices. You got WTI crude oil and Bloomberg Agriculture Index up 2% a piece. WTI down 7% month over month. Bloomberg Ag Index down 4% month over month. But again, if the market wants to take this sort of extrapolate this expectation of a sooner, more aggressive dovish pivot, you're going to see a reflation in commodity prices, and we're going to be right back where we started in early June from the perspective of the Fed having to come back out and kind of tone down rising inflation expectations. So, like I said, I've been saying it all year. Wall Street will not have its cake and eat it too. There is no easy way out of this this inflation struggle, and likely it's just as Powell reiterated yesterday, it's probably going to involve some pain. Anyway, getting to our volatility adjusted momentum signals and probable ranges. A U.S. dollar that is still bullish, we are still oversold. Gold that is bearish, we are overbought here. 10-year nominal treasury that's bullish, we are oversold. High yield credit spreads, those are still bullish, we are still oversold there. S&P 500 that is neutral VAMs getting up towards the overbought. VIX that is bearish VAMs, still in the middle of its probable range here. Not a lot of movement there. NASDAQ 100 bearish VAMs, a lot more downside than upside. Russ 2000 neutral, almost overbought there. Bitcoin bearish VAMs, almost overbought here. Ethereum bearish VAMs, we are overbought there. Shanghai Composite neutral VAMs in the middle of its range. WTI crude oil in the middle of its range. You got about 9% of upside if the market wants to get back long. The energy exposure that it shed. I mean, last I checked 6 weeks ago, energy was the best fundamental story in all of global macro. So this thing could easily run back up to $110 a barrel. No problem. I mean, that's the upper boundary of its probable range. And then lastly, ag, bearish VAMs, that is already overbought. Industrial metals, bearish VAMs, already overbought. Catch you. So thank you, Darius Dale, presenting our macro minute for Thursday, July 28, 2022. Catch you guys and gals on Pomp today at 11:20. Cheers.